All right, everyone, buckle up because we're diving deep into Tesla's Q3 earnings. And this time, we're putting on our skeptical hats.
Yeah, I think mainstream media levels of scrutiny here.
Exactly. We're talking full-on investigative journalism mode, dissecting those juicy numbers and Elon's own words from the earnings call transcript and that supporting PDF they released.
Lot of numbers to crunch, lot of bold claims to unpack.
You know, Elon spent a big chunk of that call highlighting Tesla's profitability, especially compared to those other EV makers.
Yeah, the whole Tesla's a lone wolf winning the EV race narrative.
But is it really the full story?
Well, that's what we're here to figure out. And if you peek into those financial statements, there's a pretty interesting detail. A good chunk of that profit is coming from regulatory credits.
Wait, so other automakers are basically paying Tesla because they're not meeting their emission targets?
Exactly. They're buying those credits from Tesla to offset their own shortcomings.
Huh. So maybe it's not entirely the independent success story they make it out to be.
It does make you wonder, how sustainable is that profit model in the long run? What happens when those other automakers finally get their act together on emissions?
Right, because if you're an investor eyeballing Tesla, those regulatory credits are something to seriously consider. But let's shift gears a bit. Let's talk about something a little sexier, more futuristic.
You mean autonomy?
You got it.
Mm-hmm.
Elon was in full-on visionary mode during that call. FSD milestones, cybercab progress, robo-taxi predictions. It was like listening to a sci-fi audiobook, but with stock prices instead of spaceships.
He does love to paint a compelling picture of the future. A world where self-driving cars are just around the corner, robotaxis are replacing human drivers.
But as always, right, the devil's in the details. Like, what could possibly go wrong with letting a computer take the wheel literally?
Well, let's take that claim of one crash per 700,000 miles with their supervised FSD. On the surface, yeah, it sounds oppressive.
Sure.
But what context are we missing? What were the driving conditions? How does that compare to a human driver in those same conditions?
And more importantly, how are regulators going to react to this whole no steering wheel, no pedals situation that Elon's envisioning?
Right. He's talking about a future where you jump into a cybercab, tell it where to go, and off you go. No human intervention needed.
Sounds radical, but it also sounds like a massive regulatory hurdle waiting to happen. I mean, just imagine, you're in that cybercab, no steering wheel, no brakes.
Just you and the algorithm on the open road.
Makes you wonder, are you feeling that futuristic thrill or maybe a little bit of existential dread?
I think that's the gap Elon needs to bridge between that grand vision and the actual reality of making it happen.
Speaking of gaps, what about the missing $25,000 Tesla? Remember all that hype about an affordable Tesla for everyone?
Yeah.
Now all of a sudden Elon's saying it doesn't make sense without full self-driving.
It's an interesting statement, right?
Tesla is.
Because is it truly a technological limitation? Do they really can't produce a cheaper car without all that expensive FSD hardware?
Or is this a sneaky way to push everyone towards the more profitable product, the one loaded with all those self-driving features?
It does make you think.
Because a cheaper EV is key to mass adoption, right?
Absolutely.
If they actually want to achieve that whole mission of accelerating the world's transition to sustainable energy, well, they're going to need to make EVs accessible to everyone, not just the luxury car market.
Agreed.
So this whole no cheap car without FSD thing, it definitely raises some eyebrows. Makes you wonder if they're prioritizing profits over that grand mission they keep talking about.
It's definitely something to keep an eye on. And it leaves a pretty big opening for other competitors to swoop in with their own affordable EVs and grab a piece of the market.
Yeah, so maybe Tesla's not quite the hero of the EV revolution they claim to be.
Maybe you're just playing the same game as all the other car companies, just with a shinier, more tech-focused facade.
Well, that's a question for everyone listening to ponder as we continue our skeptical deep dive into this earnings call,
Stay tuned. Welcome back to our deep dive.
where we're peeling back those layers of hype and getting to the nitty-gritty of Tesla's Q3.
And remember that quote from Elon about the factory being Tesla's hottest product? I found that pretty interesting.
Yeah, like they're not just a car company. They're a tech company that makes cars.
Right, with a heavy emphasis on their manufacturing and that whole vertical integration thing.
It's like he's saying, look, we control the whole process from start to finish. That's how we're better than everyone else.
But here's the thing. Is that level of control actually good for consumers?
In what way?
Well, yeah, vertical integration can definitely lead to efficiency, cost savings, all that. But it also creates this kind of closed ecosystem where Tesla has a say in, well, every aspect of the customer experience.
So you're locked into their world. You buy the car, use their software, charge at their stations, get it serviced by them. No escaping the Tesla-verse.
Pretty much. It does make you wonder about competition, right? And consumer choice.
Yeah, good point.
Does that stifle innovation down the line? Or
Yeah.
limit options for consumers? Or I guess you could argue, is Tesla creating this superior experience that justifies this closed system?
I mean, what if it actually is better for the customer? What if this whole Tesla approach leads to a more seamless, integrated experience that, those traditional car companies just can't match?
That's a fair point. And at the end of the day, it's the consumers who will decide. But it's important to be aware of those potential trade-offs, right? When a single company has that much control.
Right, because a walled garden might look pretty, but it could also start to feel a little suffocating after a while.
Exactly.
But you know what else is a little suffocating? That comment Elon dropped about Hardware 3 cars potentially not being upgradable for full self-driving.
Oh, yeah, that was a bit of a bombshell.
All those promises about full self-driving being just around the corner, and now it seems like those promises might not apply to everyone.
Not if you bought a Tesla with Hardware 3, apparently.
So people who paid a premium for the promise of full self-driving might end up with a car that can't actually deliver.
That's the implication.
That's not going to go over well.
Not at all. And it raises some serious questions about transparency, and consumer expectations. Did Tesla know this all along? Or is this a recent development?
Yeah, either way, doesn't look good.
Nope. And it definitely doesn't inspire a lot of confidence in their self-driving tech, does it?
No, it doesn't.
It feeds into that whole narrative that Tesla is over-promising and under-delivering when it comes to FSD.
Exactly. And speaking of narratives, let's circle back to the XAI thing for a second.
The elephant in the room.
Right. Elon insists there's absolutely no overlap, that Tesla and XAI are tackling totally different problems.
Yeah.
But, is that really the whole story?
It's hard to say for sure. I mean, on the surface, it seems plausible. Tesla's all about real-world AI, self-driving cars, things like that. XAI is supposedly after something much more abstract, artificial general intelligence, whatever that means. But this is Elon Musk we're talking about. Things tend to get a little complicated.
Yeah, because it's not just about ideas, right? There's also the question of resources, talent, funding, Elon's own time and energy.
All of that. And both companies are vying for those resources, even if their goals are supposedly different.
So there's definitely some blurring of the lines there. And that has to raise concerns about potential conflicts of interest.
For sure.
What happens when the goals of Tesla and XAI clash? Who's going to take priority? And what does that mean for investors and customers of both companies?
That's the million-dollar question, especially for investors who might be thinking, hey, if I buy Tesla stock, I'm also getting a piece of XAI.
Which is a company with a completely different mission and, honestly, a much higher risk profile.
Absolutely.
Man, this is getting a bit intense. Can we lighten the mood for a sec?
Sure.
Remember that Game of Thrones but pennies quote?
Yes. Elon's way of describing Tesla's cost-cutting efforts.
And yeah, it's kind of funny, right? Imagine Tyrion Lannister haggling over the price of dragon glass.
Maybe not.
But it really highlights how obsessed they are with cost reduction. Like they are constantly pushing for more efficiency, trying to squeeze every penny out of every single step.
Yeah, which on one hand is what's enabled them to make their cars more affordable.
Right.
But it also creates this constant pressure, right? To cut corners, to squeeze every last drop out of the system. And that's not always a good thing.
So it's a double-edged sword.
Definitely.
Because it can lead to problems, can't it?
Oh, yeah.
Compromising on quality, cutting safety features.
We've seen some controversies pop up recently about how they treat their employees, too.
Yeah, and all in the name of cost cutting.
It makes you think. Are they sacrificing long-term sustainability for short-term gains?
Cutting corners in ways that might come back to haunt them later? These are the kinds of questions we need to be asking.
Absolutely. Because at the end of the day, Tesla's success hinges not just on their tech, but also on their ability to operate ethically, sustainably.
Okay, I think we've covered a lot here. Profitability, autonomy, even dipped our toes into the XAI pool. So, big question. After all this skeptical scrutiny, are you feeling optimistic or pessimistic about Tesla?
Honestly, it's tough to give a simple answer. They're a company of contradictions. They have the potential to do amazing things, truly change the world, but...
But they've also got massive challenges ahead of them and some pretty big risks.
Exactly. It's a complicated story full of twists and turns and unanswered questions. That's what makes it so fascinating.
Welcome back to the deep dive. We've been applying a healthy dose of skepticism to Tesla's Q3 earnings.
We've gone through those numbers, picked apart the claims, even explored some of the potential pitfalls of Elon Musk's vision for the future.
And even with all our skeptical scrutiny, gotta admit, Tesla's a company that gets people talking.
Yeah, there's that awe, right? The tech is impressive.
For sure.
There is a fascination with how disruptive they are,
Yeah.
but also a healthy dose of, well, concern about whether they can keep it up long term.
It's like they're this high-wire act, constantly pushing limits, defying expectations.
And everyone's watching, wondering if they'll stick the landing or.
Or take a tumble,
Yeah.
because Tesla's ambitions go way beyond just selling cars.
Oh, yeah. They're talking revolutionizing transportation, transforming energy.
Colonizing Mars, even.
Exactly. It's a lot.
It makes you wonder, are they biting off more than they can chew?
It's a valid question.
I mean, Elon Musk is kind of famous for juggling all these different projects, right?
Yeah.
Often with timelines that overlap and demands that, conflict with each other.
Yeah, we've already touched on that whole potential for conflict between Tesla and xAI.
Right. And then there's SpaceX, the Boring Company,
Mm.
Neuralink. It's like he's building a real-life sci-fi novel out there.
It is a lot.
And it brings us to a crucial question. Is Elon's attention spread too thin? Is he sacrificing focus, execution, all for the sake of chasing, I don't know, too many ambitious goals at once?
It's possible. Even the most brilliant minds can only handle so much, right?
So after all this analysis, all this deep diving, all this skepticism, what's the verdict? Bullish or bearish on Tesla?
If only it were that simple. I mean, they are full of contradictions.
Right.
They have the potential to do amazing things, to really change the world, but
But they've also got some big challenges to overcome and some significant risks to navigate.
exactly.
So where does that leave our listeners? What's the takeaway from all of this?
Approach Tesla with, well, informed skepticism.
Don't just buy into the hype.
Right. Don't take things at face value. Dig deeper. Consider the downsides along with all the exciting possibilities.
And don't be afraid to challenge those assumptions, right? The things everyone takes for granted.
Exactly. Because Tesla thrives on disrupting things, and that includes how we think about the future of everything.
Transportation, energy, maybe even humanity itself.
It's all up for grabs.
So stay curious, stay skeptical, and most importantly, stay informed.
Because in the world of Tesla, the only thing that's constant is change. And the future, as always, is uncertain.
Well, that about wraps up our skeptical deep dive into Tesla's Q3 earnings. We hope you found it informative, thought-provoking, and maybe even, a little bit entertaining.
Thanks for listening, everyone. And remember, this is just the start of the conversation.
Keep those skeptical lenses on, keep asking those tough questions, and we'll see you on our next deep dive.